morning, everybody, and thank you for joining our webinar today on Making Tax Digital for Income Tax, brought to you to the team here at GoSimpleTax and Coconut. My name's Leanne, and Aidan, your main host, will be with you shortly. While people are still joining, I'm just going to do some quick housekeeping before we start. Please note this webinar is being recorded and all information is correct as of May 2025. You will receive a video recording of this webinar shortly, or later today, I should say. Please feel free to ask any questions as we go. We have Anna on standby to answer your questions, and at the end we'll hold a short Q&A session where Aidan will answer your questions live. Okay, Aidan, are you ready to move on to the next slide, please?
Yes, there we go. Can you hear me loud and clear?
Thank you. So my name's Leanne Ogden and I'm Head of Sales and Partnerships here at GoSimpleTax and Coconut. I've worked for the company for around about 15 years now. So hopefully now I can hand you over to Aidan to introduce himself and start the webinar for you. Good morning, Aidan.
Morning, can you hear me? Okay.
Yeah. Oh, fine, thank you.
Okay, good. So my name's Aidan Corcoran. I'm Head of Support and I'm also a Chartered Tax Advisor. So today we'll be looking at making tax digital, and more specifically, we will be looking at the following that's on screen. So what is making tax digital for income tax? What's changing? Who is affected? Why MTD is a good thing? Reporting deadlines, the challenge, and our solution. So we'll be going through those today on this PowerPoint/webinar. We'll be doing polls throughout, and we will also give opportunities to ask questions throughout, and we will get them answered either by Anna whilst we're going through or at the end on the live questions. So just to get started here, let's start with a poll of, do you know what making tax digital is? So I would hope that the polls are now showing on your screen with the different options as yes, no, and I have some knowledge of MTD. I don't want to rush through the polls too much because there's quite a few people in the room. So once I get to a certain percentage, there or thereabouts, then I will move on. But whilst it's moving and these votes are changing, I will just hang fire. So if you just select on your screen for those that can see, either yes, no, or I have some knowledge for this poll. We're getting a good amount of people answering the questions, which is good. So we're on 75% of the people currently in the webinar, so quite a few answers there. Stagnating a little bit now. So I'll give 5 more seconds and then we will move on. Cool, right, okay. Votes have stopped. Do you know what making tax digital is? And the most voted question was no. So it's a good thing that you're on this webinar then, because we are going to go over what making tax digital is and whether it will affect you, hopefully. So let's just hide those results and move on. So first of all, answering the question that we've just asked on the poll, what is making tax digital? Well, basically, making tax digital, or MTD for short, which is what you will probably see on some of the slides, is basically the government's wider effort to modernise the UK tax system. It's all about improving accuracy, reducing tax errors, and giving you more visibility over your finances throughout the year. It's going to start incorporating digital tools, and hopefully that will make it easier than ever to stay in control of your finances. So we are going to basically look at making tax digital in a bit more detail, what it's going to include, such as the quarterly updates, as you can see on screen, and how it's designed to reduce errors and improve record keeping. Eventually, it applies to landlords and self-employed businesses earning over £20,000. That £20,000 is income and is not profit, but we'll touch on that in later slides. So, what's changing for you? Well, currently we're looking at one tax return per year. We're looking at manual or spreadsheet records, one payment deadline, potential for misclaims or forgotten receipts, limited view of business performance, and risk of errors from manual entry. So how is it going to change? Well, instead of one big tax return at the end of the year, you'll start sending quarterly updates of your income and expenses with an end of year submission to declare other income/reliefs. You'll be required to use MTD compliant software. So those that are using or are manual record keepers, should I say, will need to take on something new. As we'll come to later on in this webinar, we are supplying a MTD compliant software. So we will touch on that, but just keep it in mind that if you are doing manual record keeping at the moment, either on paper or via spreadsheets, you are likely to be affected by MTD and the change. So let me just carry on. The ideas of quarterly updates help spread the workload across the year to avoid surprises, i.e. tax bills. And the best part is everything's tracked in real time with the digital tools that we can now use. So when we start talking about Coconut, you'll see that once signed up, once registered, once got your bank account submitted and linked, you'll be able to start categorizing your transactions, and on the screen as you go along, you'll be able to see in real time your income, your expenses, and what your profit would be. And then aside from that, you would also see a tax estimate based on that information. So it will all be readily available as you're going along, which is great for those people that usually leave it last minute and then struggle with getting the tax together, because who has thousands of pounds lying around? Not many people at all. So HMRC will have more data available for download when completing the final submission, which we don't currently have. So everyone really should expect less manual entry as well. So HMRC are going to provide a lot more information at year end than they currently do. So hopefully it does make everything easier for the taxpayer and accountants as well. So there's a brief about what we're doing now and what the changes will be under MTD. Let's just get a little bit more information about the audience, so we can have a look at what I'm going to go into a little bit more detail throughout. So which of the following best describes you? We've got a landlord, we've got sole traders, we've got non-resident landlord, and then we've got both for landlords/sole traders. All will become apparent why we're asking these questions, but for now, again, I'm just going to hang fire while we go through watching these votes steadily increase. And when we get to around about the same voting number as last time, I will continue.
Just while we're doing that, Aidan, sorry to butt in, there's a few people having sound quality issues. Just to let people know that the video is being recorded and you will receive a copy later on. Hopefully the sound on the recording will be better for you. Yeah. Just wanted to let people know. Thank you.
Are you having any issues, Leanne? No.
No.
Okay, so it'll be likely just internet.
Possibly, yeah.
Yeah, that's fine. Okay, so we've got the same amount of people voted from last time, so I'm going to assume that is the majority. So I can see here that the majority of people are landlords, but we do have quite a mixture of all the options. So I will go into each of the detail equally as we go through. So let's have a look and see who needs to comply with MTD. Well, from April 2026, so April coming, individuals with total business income of over £50,000 must follow the MTD rules. This also applies to landlords, and just to include it in there, it is the combined total of both. So for those people, for those 13% that are both landlords and sole traders, if you have combined income of your sole trader business and your rental business of £50,000, then you will fall into MTD. An example of this would be £35,000 of turnover in your business and £20,000 of rental income. That would total £55,000, and therefore you would have to comply with MTD from April 26. A year later, April 27, we have the second phase of 3, and the threshold now drops to income over 30,000. So again, we've got total business income of 30,000 must follow the MTD regime. Landlords the same, but as a complication to this year, it now includes non-resident landlords. So for those non-resident landlords that had, let's say, £60,000 of rental income in April 26, they wouldn't need to follow for that year, but they would now fall in from April 27. So for all the non-UK resident landlords that are in this webinar, that is when you need to start following MTD. Obviously, I'm going to say it would be best to start looking at some MTD compliant software earlier, but we will come to that a little bit later. And finally, like I said on an earlier slide, from April 2028, anybody with combined income of £20,000 or solo income of £20,000 from your sole trader business or rental property, you would then fall into MTD. So just to clarify again, gross trading or rental income is the total revenue before expense deduction. Let's try that again, deductions. So in other words, income from these sources and the combined total would go towards whether you have to comply. Failure to comply, there'll be penalties, and the phased approach basically gives people time to adjust with those with the higher income needing to do it sooner. Changing routine is difficult, so trying to get into the swing of things early is highly recommended by us. We do have Coconut, which will be the base of our MTD compliance software. So I do suggest downloading Coconut, taking advantage of the trial period just to see whether that would suit you and whether you can implement it a lot sooner rather than the dates mentioned. So that brings me on to the following poll, which is based on your most recent tax year, or you could even answer it as if you know your estimated income for the current tax year if you're on contract basis. What are/were your combined earnings? So we've got over 50k, over 30k, over 20k, and less than 20k. So again, I'll wait until we have there or thereabouts a similar amount of votes. So 10 seconds. Let me just grab a drink and then we can proceed. Perfect. The votes seem to be stagnating again. Yeah. Okay. So again, we've got quite a wide range of people in here. We've got 26% of people over 50k. We've got 20% of people over 30k, 20% of people over 20k, and 31% less than 20k. So we're looking at basically 70% of the people in this webinar, or people that have voted, should I say, falling into MTD within the next few years. So it's quite a high number, to be quite honest. And then for the 30% of less than 20k, there is no current announcement for those less than 20k, but I would not be surprised if it was a phase-in routine where everybody falls within MTD eventually, as in that will be then replacing the self-assessment system. So thank you for that, everybody, and voting. Let's basically move on. So why MTD is a good thing? So making tax digital, is it really a good thing? Well, we've taken a step back here at GoSimpleTax and Coconut to review the new policies being introduced, and we believe that quarterly reporting could benefit a lot of taxpayers. It isn't at the end of the year, so there's no rush to complete it. That also hopefully means that here at GoSimpleTax and Coconut on support, we don't get overwhelmed as we currently do in January, and people will look to get their tax return or final submission, should I say, submitted a lot earlier. So that's basically to avoid the rush, and less of a rush means that less mistakes are submitted, and any mistakes in previous quarters can be corrected in subsequent submissions in MTD. So if you do make a quarterly submission and then realize that you've made a pig's ear of it, then we can, or you can, submit the corrected figures in the next quarter. Whereas in the tax return system at the moment, you need to do a full submission all over again with the amendments. So hoping that MTD does help with correcting any mistakes. You are looking at the same information, or at least in the first quarter, 4 times if you want to review everything every time. So you are more likely to catch mistakes and hopefully improve your tax position. Multiple tax updates throughout the year allows you to stay on top of your bill as well, which in return allows you to manage your business better from a financial standpoint. So in that example would be cash flow. As you're working through the year, you'll be able to, or you will be submitting quarterly submissions. This will give you an idea of where you're up to tax-wise, and therefore you can put some money aside for that tax bill. After each submission, you will be getting an update from HMRC, which estimates the tax due. So there would really be no excuses for not having that tax figure at the end of the year, because you are being told throughout. Whereas I know a lot of people at the moment leave it till January, work towards the deadline. When the deadline comes, they're surprised by how much they've earned, and then they are in a bit of a kerfuffle trying to dig out where they can get the tax payment money from. So there's a lot of benefits on that screen really for why MTD is a good thing. What happens if you don't comply? Well, as with most processes with HMRC, if you don't meet the deadlines, you will be subject to a penalty system. Keeping on top of your record keeping is a must. As I mentioned earlier, manual bookkeeping will no longer be compliant, so it is likely new software and processes will need to be introduced in your business. This could be a little bit overwhelming for some people if left until late, and that could then result in missing submissions, not understanding what you need to do, etc., which then would mean potential penalties. So again, just putting it out there, putting the feelers out there, why not try Coconut for a no obligation trial today to see if it really can simplify your finances earlier than required. Having a system which you know like the back of your hand is much better than delving into something and not understanding it and potentially making mistakes. Remember what I've said earlier, the more submissions there's going to be, the more you're more likely to use a software. So making sure that you understand the software that you're using would definitely be beneficial. Can you get out of MTD? I'm just going to brush on this slide because not really, the answer is, but can you get out of it? Well, not unless you fall within very strict identifications. The identifications here are old age or age, disability, remote location in such that you can't get internet, or religious beliefs that, again, you don't want to use or you can't use electronics or other things. You'll need to apply to HMRC to become digitally excluded via an application, and HMRC will review all applications on a case-by-case basis as to whether or not you will be excluded from MTD. Just a point here, partnerships won't be affected by MTD at the moment, and neither will limited companies. Likely that they will judge how it comes in for income tax, and then they will decide later for partnerships and limited companies. But yeah, at this moment in time, partnerships and limited companies are not affected by MTD that we're talking about anyway. So MTD, what are the changes? We've mentioned a few, and I did mention the reporting dates and deadlines a little bit earlier. So looking at your screen, you've got your quarterly updates. Let me just give a little brief first, and then we can talk and confuse everybody with mentioning loads of dates and deadlines. So instead of scrambling once a year, MTD spreads your reporting out evenly. These quarterly updates help you stay organised and eliminate end-of-year panic, or so they should. You'll also do a final declaration, which is basically the self-assessment that we submit at the moment. That includes all other income and reliefs, but it should be much easier considering the hardest part has already been dealt with, which is your business income and expenses. I'm going to guess that the majority of people here spend the majority of their time when completing their tax return getting their accounts sorted, whether it be for a self-employed business or for their rental business. So considering we're submitting that quarterly, that should all be ready to go, and you should only have 3 months left to do following the end of the tax year, and then following that, gathering the other information, which I should say that HMRC should be providing fairly accurate numbers for, should help a lot of people get their final declaration or final submission to HMRC a lot sooner than the 31st of January. So let's just run over these reporting dates and deadlines quickly. So it's always running to the tax year, 6th of April to the 5th of April. Period covered is the first 3 months, April to July, with the following month on the 7th as the filing deadline. This is a recurring theme throughout the different periods covered. And then the final declaration will be the submission of all income, including those that you've submitted by quarterly update, by the usual deadline of the 31st of January. I will mention that the periods covered can be elected to calendar months. So it can be the 1st of April to the 30th of June with the same filing deadline of the 7th of August. But that will have to be elected separately. The default options are on screen. Any questions on that, be sure to ask. But just to keep things simple, we're just going by the default method on screen here. So for the 6th of April to 5th of April tax year of 26-27, the deadline for submitting everything will be the 31st of January 28. So hopefully that gives you an idea of reporting requirements. And that brings us on to why you should get ready today. I have mentioned this as we've gone out, as we've gone through, but getting started early is the smartest move you can make, in my opinion, and from what we've seen elsewhere as well. You'll basically build confidence with the tools that you're going to use. You can also test and trial different tools prior. You don't want to jump straight in, not having tested something, absolutely hate it, and then struggle to meet deadlines. So the sooner the better is what I'm going to say. Using those tools, you'll get better insights for your finances, and you will be fully ready when MTD becomes mandatory. There'll be no rushing, no panicking, just progressing at your own pace with the software of your choosing. A little famous Benjamin Franklin quote here really does apply. By failing to prepare, you are preparing to fail. This is literally the biggest shake-up of the tax system since self-assessment. Bit of a tongue twister for me there. Since self-assessment was introduced. So we highly recommend starting early with choosing a software that you're going to hopefully use throughout. Aside from the software, you might even need to introduce new practices within your business. So what would they be? Well, do you have a separate bank account currently between your personal and business for those sole traders in here, or for those people with rental income? If the answer is no, then would the question be, do I need to start implementing a change and have a separate bank account for my rental income and then another separate bank account for my self-assessment business? And why should you do that? Well, when you come to MTD and you've got software which links to your bank account, why would you spend precious time going through a mixed bank account where you've got your daily spend in your personal life, as well as all your business expenses, as well as rental income and expenses too? There'll just be so many transactions there that you won't be able to remember what happened to, or you might not be able to remember what happened 2 months ago and what that expense was relating to. And therefore, it would take a hell of a lot more time in comparison to having 3 separate bank accounts, one for your rental income, one for your self-employed business, and one for your personal life. So that's there just like a little tip in regards to efficiency and valuing your time a lot higher. Obviously, starting to implement these changes will be a big thing if everybody's just used to using one bank account. But in my opinion, in preparation for MTD, creating new bank accounts specifically for different income sources would be highly beneficial and highly efficient when planning your time and your business's finances. So, based off that, let's run another poll with what do you currently use to record your income and expenses? So the options are accountant, spreadsheet, other digital software, GoSimpleTax, nothing at all, or something else. And for those that answer with something else or other, then just drop a little comment into the question box or chat box. So just a little bit of voting on the screen, everyone, please, if you can. Again, 10 seconds, and then we will continue. Okay, votes seems to be voted. Yeah, okay, similar percentage to before of people now voted. So I can safely say that the majority of people are currently using spreadsheets, some accountant, some other digital software. A quarter of people GoSimpleTax. 7 people currently using nothing, and a few people using something else that we've not mentioned. So for those people, if you don't mind just sticking a little comment as to what you are using, and then we can potentially analyze those options for future polls. For those that are using nothing, either you will not fall within MTD currently, or if you are going to fall within MTD, then it would definitely be worthwhile looking at implementing the software sooner rather than later, as that'll be a whole new thing for you and your business. And obviously, getting to know a new system will take some time. So thank you everyone for that. And let's proceed. So considering I've spoken about MTD, what it is, deadlines, penalties, is it good, what are the cons, etc., etc. Let's move on now to our MTD solution, which is Coconut. So what is Coconut? Well, Coconut is a simple and powerful app made just for self-employed and landlord users. It connects to your bank account and automatically retrieves transactions from said bank account that's connected. It allows you to categorize the transactions, whether it be for a sole trade business, for rental property, or whether personal. And from that, you will basically get a summary of income, expenses, and then an estimate of any tax due based off the numbers involved. So hopefully there will be no surprises when you come to do your self-assessment currently, or when you come to do MTD later down the line. Coconut was originally built with MTD in mind, and therefore will be optimized upon the MTD system release. There's already features in there which will follow through onto the MTD version. So like I say, the sooner you download it and give it a little trial, the sooner you'll be able to decide whether Coconut is for you. There won't be too much change, but obviously there will be some change once the MTD features are released and available to yourselves. So that's pretty much a brief on Coconut. The best thing I can do, really, or suggest, should I say, is just give it a download, make use of the free trial, and see whether it is for you. So why would you use Coconut now? Well, starting now helps you build good habits, stay organized, and takes the stress out of tax season. Like I said, it is basically a bookkeeping app at this moment in time, so it should help assist with your self-assessment for the current tax year. It's not only relatable to MTD. You'll already have a complete digital record when MTD kicks in, like I said, and it makes everything smoother for you as you're categorizing and basically getting your income and expenses categorized. Thanks to our seamless integration with GoSimpleTax as well, you can populate your tax return straight from Coconut, one click, and your SA 103, also known as your self-employment pages, or your SA 105, also known as your property pages, will be completed. No spreadsheets, no copying into HMRC's website, and hopefully no mistakes. So that is why you should use it. And like I say, it's easy to download, it's easy to register, and it gives you an idea on what to expect. So I now believe I will be quiet and let take over for.
Thank you. Yeah, have a well-deserved 30-second break while I do this. Okay, thank you, Aidan. Okay, everybody, so you'll now see a QR code on the screen. If you give that a scan, you can try Coconut for free for 30 days. And then when you come to purchase, you can use the code there on screen, GSTMTD, all in capital letters, to receive a 30% discount off for 12 months. So that means you'll pay just £6.96 per month, and the usual price is £9.95 per month. Either option, that's less than a few coffees a month and a lot less than unpaid invoices, forgotten expenses, or an unexpected tax bill. So take the trial today and find out why so many UK sole traders and landlords love Coconut. If you're on a mobile watching us now and cannot scan the QR code, don't worry, we'll send you details in an email later after the webinar later today. Okay, so hopefully Aidan has helped you all today, and let's find out. We'll do some Q&As. We did say the webinar would be for 30 minutes, but there's still a large number of people with us, so we'll just see if we can get through some questions now, if you're ready, Aidan.
Yeah.
Yeah, okay. So how often do you have to pay tax? Is that quarterly?
So how often do you have to pay tax? So there's no current announcements to change how the tax payment system works. So it'll still be by the 31st of January, and payments on account will still exist, i.e. the 6 monthly payments, one being in January along with the balancing payment, and the second payment account in July. It's likely that once MTD is introduced that they will change it, but like I say, there's no concrete information on that currently.
Okay, thank you. And if I have PAYE income of 40k and property income of 15k, will I go into MTD?
So I did mention a similar example earlier, but that was with self-employed income rather than PAYE income. So in this example, sorry, Leanne, was it 40k?
Sorry, yes, it was, yeah, 40.
So
15.
40k of PAYE income would not be going towards the MTD thresholds, whereas the rental income does. At being 15k, that would be below the thresholds mentioned, and therefore the answer to the question is no. However, if that person is in an industry where they can leave the employment and become self-employed and earn similar money, then at that point they would then have to comply with MTD because their income is going to exceed the thresholds mentioned via the combined option.
Okay, thank you. Does the non-resident, non-exec director fall under MTD?
So, 1 second, let me just get my head around that question. Non-resident, non-exec director. So, in regards to the non-resident, we mentioned if they have a rental property with income over 30,000, they will fall within MTD from April 2027. If it is specifically a director with no rental income and a director being that of a limited company, then no. We did mention before that limited companies aren't affected by MTD currently. Well, MTD for income tax anyway. So in regards to that question, if it was a non-resident landlord with income over the thresholds, then yes, they would do either in April 27 or April 28, sorry. And if it's just merely a non-resident, non-exec director with no self-employed income and no rental income, then the answer is no.
Okay, thank you. What if my rental income, which is split between two owners, is less than £20,000 per year?
Good question. Good question. So in regards to that, you are looking at an individual basis. So if the share of rental income is below the threshold, then you do not need to register. If you had £50,000 worth of rental income split between two people, 50%, 50%, then that would exceed the 20,000 threshold, and therefore you would need to register in April 28. But it is definitely on an individual basis and not on a two-person or three-person, however many people on the property basis. It is just for your own personal thresholds.
Okay, thank you. And can we use Coconut if you were in a partnership, like husband and wife, for example?
You will be able to use Coconut for that. Coconut allows you to include percentages on the income, what's relevant to yourself. And if that's 50-50, then you can share that information between the two owners of the property. And therefore, Coconut is an option if that does fit your needs.
Okay, thank you. Are you okay to do a couple more? We still have quite a large number of people and questions coming through, so we'll possibly just do a couple more if that's okay. So we've got, what is the age definition for exemption of MTD?
Again, there's no specific age definition in terms of number. It's more when you make an application to HMRC, for that exemption, they will decide if you're struggling. You may have medical conditions at an earlier age, such as, like, let's say 70s, or it might just be that you are very healthy and old and don't know how to use computers, or would struggle to get somewhat access. So there's no specific definition. You just would apply on the basis of age and then give your explanation why you think you should not be included in MTD.
Okay, thank you. And what about other income? For example, bank interest, dividends. Do you just cover that separately with the final declaration at the end of the year? And will providers such as financial companies and landlord management companies be geared up to provide you with the figures needed each quarter? Currently, they tend to send annual summaries only.
Let's break that question down. So other income would be reported on the final declaration. Again, like I said, HMRC seem to be pushing towards this digital revolution, should we say, on the basis that they are going to provide a lot more information. So they are speaking with bank providers, etc., and they should have bank interest information available for download. How that's going to work, not too sure, but that is what we are led to believe. So other income should be available from HMRC, or most of it anyway, and that will be reported by 31st of January, following the end of the tax year, on the final declaration. So that was that question. And then what was the second part of that question? Sorry, Leanne, just to refresh.
The second part was the providers such as financial companies and landlord management companies being geared up to provide the figures they need at the end of each quarter.
So in regards to that, they are well aware of the changes, and I would expect the letting agencies, etc., to be able to provide those details. In regards to investments, that's not a big thing because we're not reporting investments quarterly. The quarterly reporting will be of your self-employed business and your landlord rental income. So in regards to letting agencies, they should be well aware of the quarterly reporting requirement, and no doubt will contact you closer to the time, or you could contact them and ask them the question, in the basis that, like I said before, preparing early is beneficial, because if your agent doesn't provide or won't provide quarterly, then it's probably best that you start looking for someone else to manage your property instead. So yes, they should be able to provide quarterly. If not, take early action and change it to someone who will.
Okay, and just a couple more, because we still do have people hanging on, possibly waiting for their questions to be answered. So I've lost where I was at on the list of questions now. If you elect month-end reporting periods rather than the default, how do you ensure that you report earnings for the whole tax year, given the year starts and ends partway through the month?
Well, you'll be reporting the same period, i.e. 365 days. It'll just be a 5-day difference. So rather than it going from the 6th of April to the 5th of April, you'll be going from the 1st of April to the 31st of March. So that income will get caught up. This is for people currently who are using the 31st of March year end. They will be the ones that will be applying for this calendar election rather than the tax month election, but which is the default. So yeah, if your current accounting period is the 31st of March year end, then you're likely, or if it was me, I would be inclined to elect for the monthlies. Whereas if you have a 5th of April year end, then you would just go with the tax monthlies.
Okay, and does this apply to tax year returns for 24-25?
No. The earliest, as mentioned earlier, the earliest year that MTD gets introduced is from April 26, and that will be for the 26-27 tax year, and your income on your submitted 25-26 tax year is what HMRC will consider. So if your income is over £50,000 on that return, then you will need to register for MTD. If it's under, then it is likely that you won't, but you may in the next couple of years fall within the over 30 and over 20k turnover / income thresholds. So keep an eye on that on your 25-26 tax return. But like I say, the sooner you get some sort of bookkeeping software that allows you to see this, the better.
Okay, I promise now just the last two questions, and then we will wrap up. As I'm also an employee, I get the final P60 in April to know the exact yearly figures. So I have that going on as well as on top of the rental income. How do I handle that?
Again, PAYE isn't required for quarterly submissions. That is included in your final declaration. With your rental income, you would be looking solely at your rental income, whether you fall within MTD or not. If your rental income is over 50k, then from April 26, you'll have to register for MTD. If it's over 30k, but under 50k, then from April 27, and if it's over 20k, then it's from April 28 that you would need to register for MTD specifically. So if you're employed, ignore that in regards to MTD requirements up until you are submitting your final declaration, which would then need your employment income included.
Okay, and in regards to Coconut, if we have property split between husband and wife, will we need 2 Coconut subscriptions even if we use the same account?
I would say no. If it is the same accounts and exactly the same share, then 1 subscription would be enough. You would simply do the bookkeeping once and then share the data.
Okay, and another good one's just come in, and I couldn't quite want to know the answer to this one as well. So, does foreign income also fall within MTD? And if so, how are all the foreign credit tax relief calculations done?
Foreign income is not falling within MTD for income tax in regards to the thresholds. That is going to be included in the final declaration. But as far as I'm aware, it is not including foreign income at this moment in time in regards to the thresholds.
Okay, and one last one that possibly a lot of people are asking: why are HMRC not paying for or providing the software that they are insisting we must use?
Sorry, say that one again, sorry.
Why are HMRC not paying for or providing the software that they are insisting we must use?
It's mainly costs from HMRC's side of thing. They originally wanted to provide a free software, but I'm assuming the cost was too much, and they recently announced that they will not be providing a free version of it. So it will be more budgeting on HMRC's side of thing, I'm assuming, but it's more of a question for HMRC than us.
Okay, brilliant. Thank you very much, Aidan. So I think we're drawn to an end of our time with you all here today. We hope you found the webinar to be informative and it's helped you as you start your MTD journey. Do take a trial of Coconut and make a note of our website. It was www.getcoconut.com. Thank you, Aidan, just going back there to that screen. We will send you that information in an email also later today. Apologies if we did not get to answer all your questions. Thank you for joining the team here at GoSimpleTax and Coconut today. We hope you can join us on future webinars as we all prepare for MTD for IT together. Once again, thank you and enjoy the rest of your day.